Hello, I'm Louise Macaulay and welcome back to Dugas Copy TV. Joining me on the line to discuss this week's most important market movers is Daniel Murray, Chief Economist at EFG Asset Management in London. Now Daniel, the Bank of Japan published its monthly report this morning and it seems that the BOJ is optimistic about the country's growth. What is your outlook for the Japanese economy this year?
So I think the background against which we have to consider the Japanese economy is one in which it still faces significant structural constraints. So not least, of course, the very challenging demographics, which acts as a serious headwind to future trend growth. But I think in the short term there are some reasons to be more optimistic. Not least, of course, the stimulus to the economy from the weaker currency. And of course, this hits the economic activity with a lag, and so should start to benefit the economy as the year progresses. That having been said, I don't expect it to be runaway growth for the Japanese economy. This is all about relatives. It's just that I think relative to the sort of close to zero rates of growth that we experienced in much of the past for Japan, we could see a bit of an upside surprise.
The German ZEW survey data is expected to rise from July's reading of 29.7. The construction sector slowed 4.5% month-on-month in August. So which sectors are seeing the most growth?
Well, the housing market by itself I don't think is a major concern for Germany, and certainly in terms of the data, there's 2 points to bear in mind. One is that the data anyway is quite volatile and subject to change. And secondly, it's that the German housing market is much less significant for the German economy than housing markets are in most other economies. So there's a much lower share of home ownership in Germany than there is across much of the rest of Europe, and certainly relative to the Anglo-Saxon world. So the housing market by itself is not a great concern. We have seen, as of course the employment metrics have improved, we have seen retail sales improve slightly in Germany, and that's beneficial obviously from a GDP perspective. But the main catalyst and the main driver of growth in Germany has historically been and remains the export sector.
We also have Euro area GDP data out this week. Retail sales decreased 0.6% in June. Will this be a drag on GDP? And what are you expecting from this week's German and Italian GDP?
Of course, retail sales is directly into the GDP data via the consumption component. So, of course, that will be a drag. I think what we have to remember with Eurozone GDP is that from negative rates of growth through 2013 and early 2014, we saw quite a sharp improvement in the GDP metrics in the second half of 2014. And that, of course, was due to a combination of factors. The benefit of the weaker currency was helpful for the export sector, the benefit of lower oil price given that Europe is an energy importing sector, and of course the build-up to and the activation of ECB quantitative easing, the asset purchase program. So all these factors have been a boost to Eurozone growth over the past 9 to 12 months, but their impact is waning. And that doesn't mean it's disaster for Eurozone growth, but what it suggests to me is that we're unlikely to see much more of an acceleration from here. So having gone from negative to positive last year, I wouldn't expect to see such a sharp improvement in growth in 2015 over 2014.
UK unemployment rose for the first time in 2 years in June. Nevertheless, most analysts expect a drop back to 5.5% this month. So was last month's reading just a blip? What is your take on the UK labour market at present?
So I think it was a blip. Obviously what happens is the lower the unemployment rate gets, the harder it is for it to fall further. So it's much easier to experience a significant drop in unemployment when you're starting from a high level. And the UK labour market has performed well during and after the crisis. We had high levels of employment. So I'm not overly concerned about 1 month's bit of data.
And finishing off, what other events or data releases should investors pay close attention to this week?
The ECB monetary policy meeting, I think they're on Thursday, and obviously the important just to see, for a rain check as to what the ECB is currently thinking, what its views are, for example, with regard to Greece and regard to the timing of its purchase program.
Daniel, thank you very much for sharing your insight. Well, that is all for now, but join us throughout the week as the TV team will keep you up to date with financial news as it happens. Goodbye for now.